somewhere near the cafeteria. We went. We couldn't find the damn thing. We went home real quick to Gilbert's place. Gilbert called and, located somebody who knew these guys and what, where it was exactly. And, it was such a, modest meeting that the administration desk for the building had no idea where these people were. And so we arrived thinking, we're going to go to an auditorium that's loaded with people, and we're going to hear the Lyndon Larouche spiel, plagiarizing my work and developing it into some other thing. And so we're late, and we're running up the stairs, and I land on the floor, and good Lord, there's nobody there. There's 4 people, a woman and 3 young men, and they're sitting at a table. I first thought that 1 or 2 of them might be part of the audience, but nope, just Lyndon Larouche people. No audience at all. Not a single person. Not one person. So they explained that they were outside of this plush room that it was supposed to be in because the room was expensive. And yet they're just sitting out in this lounge at desks and all with pamphlets and whatnot to hand out. And not one person. And here Gilbert and I come, and we're not the kind of soft touches that are going to be recruited into this, Lyndon LaRouche, anyway. So he claims to have predicted the, failure in 1971, but of course the only process that actually predicts the failure is my thesis of inevitable failure. And, he doesn't have that, and plus we find out very soon he's advocating this Glass-Steagall Act, and these people are saying, oh, it has tractions. Here they're holding a public meeting, and we find out these kids have come from Washington all the way to Idaho to do this, and not one person shows up to attend it. But me and Gilbert are just coming for sport because I want to challenge these guys. So they don't have anything going on, and I just went right up to him and introduced myself, Mike Montagne, original architect of mathematically perfected economy, and I gave him an earful of mathematically perfected economy. Well, they were first saying, well, it sounds like you know a lot more about this than I do. And before you know it, they want to speak to us, though. They want to give their presentation. And so basically, to make a long story short, they're advocating this Glass-Steagall thing. And Lyndon Larouche is doing this. And, just the other day I saw a video from Australia where this guy is, advocating that Glass-Steagall is going to save us. And he's got Lyndon Larouche in the background of the video. And you can see him, but you can't hear him, And there isn't a principle given for this, Glass-Steagall Act at all. So anyway, I just thought I'd read you a little bit about Glass-Steagall because if people tend to think, oh, if somebody else said this is a solution, it must be the solution. So let's I don't want to learn about that, so maybe it is. Well, let's cover this just a little bit. It won't take much time to mop this up really quickly. Anyway, so you can all do this. Go to Wikipedia and look up Glass-Steagall. It's spelled Glass. Steagall is spelled Steagall. Glass-Steagall Act. So I'm on Wikipedia's pages here. Now, it says, this article is about the 1933 Act, so it's 3 years into the Great Depression, establishing the FDIC, Federal Deposit Insurance Corporation. For the 1932 Act by the same sponsors, see Glass-Steagall Act of 1932. Anyway, The Banking Act of 19... I'm going to read Wikipedia from this, and then I'm going to elaborate on any particular points. But this is what Iceland is looking at, too. It's number 1 point of the 10, and this fellow has just said, Glass-Steagall, it's the weapon of choice, okay? Is it or is it not? You know? So sit back, listen, this is no work. The Banking Act of 1933 was a law that established the Federal Deposit Insurance Corporation in the United States and introduced banking reforms, some of which were designed to control speculation. Is a problem speculation on banking, or is the banking problem, is banking the problem? And is there even any speculation really in banking which has forced itself to compromise real creditworthiness because somehow, though it can't be justified any longer, they still have to justify loaning us ever greater sums of circulation merely to maintain a vital circulation without any inflation whatsoever? Even though Ron Paul is constantly decrying inflation and we don't have it. So, anyway, this Banking Act of 1933, it says, was a law designed to control speculation. Now, you may think that Wall Street speculation and trading of our debts is the cause of all this, but the reason they're being traded is this whole banking system, because it's about unearned profit any way you can get it. And in the end, you have all these bad debts, and, well, what are we going to do with them? Let's all package them up and see if we can't sell them to some poor sucker who will buy them, you know. And this is why people, you know, mortgagers can't produce the mortgage contract anymore, because, you know, these mortgage companies have been traded so often, they don't have the paperwork anymore. Okay? Well, of course, there's further problems in all this, and that is that these, you know, what happens is the guy that they want to sell this to, you know, they think they've got a sucker, and this guy's got a scheme. He's going to buy 2 or 3 insurance policies on these debts and collect like a bandit when they go bad. You know, so you get all these schemers involved in trying to make more money from the pool of wealth, which is limited to production, and the more they get, the less real producers can be rewarded for production. And from the very beginning, they can't be rewarded commensurate with their production, which is what true free enterprise is all about, because of this banking system. The banking system is terminal. It produces these conditions, and these are what further scam artists, like all these plagiarists who are talking about solution all of a sudden, you know, as if, you know, they determine all these things, and all of a sudden the whole world understands that interest is the cause of terminal failure, as if that was automatic, when just, you know, 2 years ago, G. Edward Griffin is a perfect example of, no, I didn't understand that perfectly on my own. I did all the math wrong. As a matter of fact, I believe that everything was justified. And he doesn't even talk about the obfuscation of the currency, which is a huge crime just in the extent of the principle that's stolen from us. Is this Glass-Steagall Act going to address any of these things? Absolutely not. So is it a solution? Is it even a powerful tool? Absolutely not. It goes away with the banking system. It only applies to that, and only to a trivial degree, which is incommensurate to solving our issues. So, it says it is most commonly known as the Glass-Steagall Act after its legislative sponsors, Carter Glass and Henry B. Steagall. Some provisions of this act, such as Regulation Q, which allowed the Federal Reserve to regulate interest rates and saving accounts, were repealed by the Depository Institutions Regulation and Monetary Control Act of 1980. So the Federal Reserve can't control that. Okay, but it does control the cost of the money that the banks borrow from the Federal Reserve to loan it to us, okay, which is just evidence of our own promissory obligations to each other. Okay, it sets that, and it doesn't respond to government. And the fact of the matter is, not only is the interest, you know, totally unjustified, laundering the principal into the Federal Reserve's possession is totally unjustified as well, and we're not even going to talk about that here. Provisions that prohibit a bank holding company from owning other financial companies were repealed in November 12, 1999 by the Graham-Leakey-Bliley Act. The repeal of the Glass-Steagall Act of 1933 effectively and so it's just about what companies can hold companies. All these crazy goings on which result out of the banking system. We're going to prevent that. It's as if we're going to try and prevent what a banking system does by preventing some of the companies that we identify to be the end, instrument of these things manifesting, upon the subject populace. But we're not fixing the root problem. So what are we going to do? This is all about, this is like, if you jumped into a giant sawmill and got sawed into a million pieces, but 2 weeks ago you stubbed your toe and you had a little owie there, and when you come out of these saws all chopped into pieces, you ask for a Band-Aid. This is crazy. The repeal of the Glass-Steagall Act of 1933 effectively removed the separation that previously existed between Wall Street investment banks and depository banks, and has been blamed by some for exacerbating the damage caused by the collapse of the subprime mortgage market that led to the financial crisis of 2007 to 2010. I hope they give us a footnote that that's not over yet. Anyway, okay, excuse me, it isn't the subprime mortgage crisis. These people, have to buy homes. The economy is terminal. It puts us out of work. A lot of good people aren't able to keep up with their mortgages. There's a lot of good businesses that have been have existed for 10 or 20 years, which suddenly, can't even afford their rent. You drive through town after town after town. They're like ghost towns. There's no industry. We've already expatriated it out of the country, and you want to blame this on a subprime mortgage crisis? I'm sorry, you're losing your houses because the economy is failing, not because people who couldn't pay their debts were given a debt, but because anybody is eventually not going to be able to pay the debts, because the debts are multiplied upon us artificially by this obfuscation of the currency. So that's what you have to address here. Anyway, this goes on. It says, the potential to make enormous profits trading mortgage-backed securities with artificially high ratings encourage banks to take Sure, the banks were doing some wrong things too, because they had to promote this bad product is better than it was, and these are the kinds of things that they do. But what made the product bad and forced them to do this, even though they're a bunch of scam artists, but this wouldn't happen under mathematically perfected economy because you eliminate all these people from the equation. But Glass-Steagall doesn't do that. It's basically trying to say, let's prevent these people from doing these bad things, but they have to happen because of this multiplication of artificial indebtedness. The mortgages are going to go bad, no matter if people trade them or not. They're going to go bad. You're going to lose your job because of this artificial indebtedness. We can't even afford to maintain a vital circulation any longer. We're in terminal failure. But that isn't because people are trading our bad debts, trying to survive themselves by being the scam artists that they are. You're blaming the owie on the Band-Aid, here. Sorry, it's just, you stubbed your toe, and that's all there is to it, and after you drove yourself through a saw, what happened to your toe doesn't matter. You have to not jump into saws. And that's what this is. This banking system is nothing but a huge lie to exploit us. So anyway, it goes on. The ease with which people were obtaining home loans contributed to an artificial housing boom and exacerbated the inevitable decline. Sure, right. So. It goes on. It's kind of interesting, some of this stuff. There's an occasional point in here, but, this doesn't fix the obfuscation of the currency, which is terminal. Right there alone, Glass-Steagall, sorry, doesn't count for diddly. Okay? It says here the first glass